Welcome to episode 3. We are going to be going over market structure. Now, this is probably one of the most important lessons. If you know nothing about trading at all, then this is going to be one where you really need to pay attention because there's going to be a lot of information and there's quite a lot to take in on market structure. Like, I'd say a good portion of trading is understanding market structure and why it's moving in the way it's moving. So that's not to scare you or to it just is. You need to listen. So we're going to get straight on with it. Now, market structure is essentially the way the market moves and why it moves. So if I get rid of all my previous drawings, okay, and we look at this chart. Now, you should be basically always able to tell me if we are in a downtrend or an uptrend. I mean, that is pretty basic stuff. That's got nothing to do with trading. You should be able to look at this and tell me, are we in an uptrend or a downtrend? Okay. Now, a downtrend consists of lower lows and lower highs. Now, what that means is the market moves like this. So you'll get a move down, a pullback, a lower move down, which is lower than this one, and then a lower high. A lower low, which is lower than this one, and a lower high, which is lower than this one. You get the point, okay? And that's how the market moves. Of course, it's not going to be perfect. It may look something like this. You're not going to get a perfect zigzag, but as long as the lows are always lower and it looks obvious, then we are obviously in a downtrend. Of course, it's the opposite for an uptrend, but I'm just going to run over a downtrend now. So here you can see we have got a high and we have got a lower high. Now, you should be able to spot these, okay, just by looking at the chart. It stands out. It's really obvious. There you've got a low, and there is the major lower low. Now, this is also a low, but this is also internal, okay? This is part of just the bigger move down. Okay, so yes, it is a low, but this is the bigger move down. So from here to here is the full move down. And this to this is the big move up. So in the same scenario, we have created a new lower low, which is lower than this one. And we've also made a lower high, which is there, okay? Of course, it's not a perfect zigzag like I just drawn, but of course you can notice the lower lows and lower highs. You should be able to notice that, okay? We've got a clear high and a clear low, a clear high, clear low. And that's what you've got to look for. So when we are in this type of pattern, we are in a downtrend, and that's when you're going to be looking for shorts or sells, okay? Now, if I find an uptrend, I will find one. Okay. Here. Now, here you can see, obviously, the clear difference that we are going up. But it's the exact same concept. So you've got an obvious low with a very obvious high. Now, we call these swing highs and swing lows because that's where the market swings and then it comes back down. Okay. So here we've created a higher low. And I'd say the full move of this is there. Okay. That is the higher high from this move up, because this is just one big swing up. There we create a higher low, and the actual higher high from this one is very impulsive, and it ends up there. Okay, you get the point. Now, it's not going to be in a perfect zigzag, so don't expect anything to look perfect on the charts. It's always going to be realistic. It's never going to move in a perfect zigzag. But as long as you can identify that that is how the market moves, you'll be okay. Now, the reason that the market moves like this is due to premium and discounted prices. Now, this is going to be slightly technical, but I need to get this in here, and it's going to hopefully make you understand why the market moves. So I'm going to kind of use like an analogy. I mean, it may make no sense whatsoever, but I'm going to go with it anyway. Okay, so let's look at this. Right, if I draw out this path, I'm going to draw this exact chart, but in terms of a line. So I'm going to start from here. Okay, so we've got the move up to there. We've got a little pullback. We've got a high. We've got another pullback. We've got a bigger high. And we are currently there. Okay, that is exactly what is here. Okay. Now here you should be able, again, to identify your higher highs and your higher lows. Okay, high, high, low, low, low. So we're clearly in uptrend. Now, you're probably wondering, why does the market move, okay, just because we pull back? So why does the market just pull back and then go again? Now, the reason for that is premium and discounted price zones. So this is going to get technical, like I just said, but I'm going to explain it. So if you imagine that everyone in the market now knows we're in an uptrend, so everyone is looking to buy. Okay, let's say that this price here, okay, is, I don't know what we can call this. Let's say this is £1, okay? So let's say there's a brand new piece of clothing that is on offer. Okay, let's make it more realistic. Let's do £10. Okay, so let's say there's a brand new jumper that you can get in the shop for £10, and that is currently here. So the price of this jumper is £10 here. But here, the exact same jumper is now £5. This is, you've got to bear with me, this may sound ridiculous, but bear with me. It will make a lot more sense. So, you've got a jumper that you really want, it's £10. Down here, the exact same jumper is worth £5. Or you can buy it for £5. Okay? Which one would you prefer to pay? Okay? You should be obviously saying you prefer to pay for this jumper when it's £5, so when it's on sale. Yeah? So everyone likes a sale, whether it be clothes, whether it be food. If something's on discount, then most people like to pay for it. Okay? Whether it be a service, you know, anything. Whenever there's a sale, people are attracted to it and they're going to buy it. So that is the exact same concept with price in the market. Why would anybody want to buy Nasdaq when it's at 21,000? Okay, look at the price over here. So Nasdaq's at 21,000. Why would anybody want to buy Nasdaq at this price when we can wait and get it at this price? Okay, does that make sense? So it's the same for any of these pullbacks. So if you actually look at the chart, why would anybody want to buy Nasdaq when it's here? When if they be a bit more patient, and they wait for a pullback, they've got a chance of getting it at this price, which we call a discounted price because it's on sale. So you imagine that this is premium price where it's at the most expensive it can be, which is always the top of the range. So always the high is going to be the most expensive it is. Okay, but the pullbacks is when it's on discount. So it's called a continuation pattern. So we get, you have to bear with me here. So here is premium. When we get a pullback, we are now into discount. And the way we figure that out is by drawing the range. So hopefully you understand what I'm just saying there and I'm not talking a load of rubbish. Like, I know it sounds like a load of shit, but that is genuinely like the way I learned. And this bootcamp is going to be exactly how I think of things. I'm not going to say something that I don't think. Like, this is genuinely just my mindset into a video. So I think of it that way. It's on sale when it's lower down in an uptrend. If you're buying it at the top, okay, if you're buying here when it's at £10 for this jumper, and then the next day it goes on sale down to £5, you're going to be annoyed that you didn't wait, okay, and be patient. There's a very important lesson in there of waiting and being patient. Trading is a massive patience game, and if you aren't patient, then, I mean, you're going to have to be patient. So somehow or not, you're going to have to learn to be patient. Do you get my point? If you bought this jumper at £10 and then the next week your friend comes out, he's got the exact same jumper on, but he paid half price for the exact same jumper, you're going to be fuming. Okay, so it's the same concept. What you do is you wait for this high to be broken, which you got broken there. So we've now created a what? A higher high, because we know that this was the previous high and we have now broke it. So this is a higher high than this one. So now what you do is you wait for it to pull back into a discounted price. So that means we wait and we be patient. Yes, we know we're in an uptrend because we're creating higher highs and higher lows. So we want to enter the market and look for a buy. But again, you've got to be patient. You've got to wait for it to come to the best possible price for you to get in. Okay? Now, the way you figure out premium and discounted price is by using this tool on the left side of TradingView called the fib retracement. Okay? Now, I'm going to be using this. It's going to be very technical, but you need to bear with me. And if you're watching this video, then you've got another laptop or a phone, and then you can try this out whilst you're watching. So press the fib retracement, and what you're going to do is you're going to draw, when you're in an uptrend, from the low to the high. So where is the lower low here? Okay, on this chart, it's there. Okay, the reason it is because it's the lowest point we went before the move up. So this is the bottom of the range. We simply then press the low, and we just drag to perfectly in line with the high. Okay, so there. Now yours will look a lot different to mine. Yours will have all these different colours on it. Okay, it'll have a lot of colours. Now, what you want to do is make your Fibonacci retracement the exact same as this. So pause this video. So get rid of the trend line as well. Pause this video and make it exactly the same. Right. So now hopefully you should have had the Fibonacci exactly the same as mine. Okay. Now what this represents is this line in the middle is the start of discounted price. So this is where the sale starts. So at this level here is where the sale begins. So this is where the jumper now goes on sale for £5. The same analogy that I'm going to use for the rest of the video. Okay, hopefully you understand. So here, the jumper is £10, okay? From this whole time. So £10, £10, £10. It's still £10. The second we touch into this black line or below is when it's on sale. So we've just tapped into the sale. That jumper is now £5. So if you purchase this stock or this jumper or whatever you're going to be buying, GBP, USD, gold, whatever it may be, this is now a discounted price. So this would be a far better entry to look for a higher high than buying here. Because what are we expecting when you buy here? We are expecting a pullback. So if you're buying, once we've broken structure at a higher high, you're going to get stopped out. Because price wants to come back to a discount. Do you get what I'm trying to say? So price always wants to be in the discounted price to then continue further in the trend. So we'll go again. So if we look at this, for example, if we get the Fibonacci again and we draw it from the low to this high, let me not make it confusing. So we've got a low and a clear high, okay? So we draw it low to the high. Have a guess where price comes into. Okay, it comes in to the discounted price. And then we make another move up. And we create a higher high. So this is now a break of structure. We've made a higher high. And now we expect the next leg to come back down into discounted price to then look for a buy higher. And that is simply the basics of the market. So all you're trying to do is be patient and wait for one of these moves. And I'm going to show you now a downtrend example, just so you've got both sides. So here, you can see that we have got a clear and obvious low, and then a high. So at this point now, again, we're just waiting. We're going to see what the market's telling us it's going to do. Here, we create a lower low and we break structure, which is from this point to this point. There is a break of structure because price is broken through it. That's why it's called a break of structure. Now simply, for a downtrend, you draw it from your higher high, so the highest point it was, to the lowest point it's been. So anywhere above this black line is where we want to enter a sell, or we can expect the market to continue moving down. So you'll see the candle comes in, past the black line, taps into discount, so the jumper's on sale again, and we get a push lower. So again, there is another break of structure, because we have made a lower low, and we have made a lower high, which is there. Do you get my point? Okay, it's very simple, very basic. Hopefully you're following along. And there's not more left of this, not much more, left of this lesson. But hopefully you're following along. You know, you're writing notes. This should be pretty basic to understand. Okay. I'm trying to explain it the best as possible. Now, the last thing we're going to touch on is the change of character. So, the basics of market structure is everything I've just gone over. You've got your lower highs and your lower lows for a downtrend, higher highs, higher lows for an uptrend. Now, you may be wondering, well, how does this ever change from a downtrend to an uptrend? And I'm going to show you that now. So, let me find a good example. Okay, so here we've now got both trends on the screen at the same time. This is where you should be able to identify already, just off what I've just said, you should be looking at the chart now and identifying your lower lows and your lower highs, and your higher lows and your lower lows. So here we have got the clear and obvious high. There is your low. We have got a high again with a lower low. Lower high, lower low. That's where it gets interesting now. So we've got a lower high and a lower low. Now, of course, the next one is not a lower high. We do not make a high that is lower than this, okay? Because the actual high is now up here. So what we call this is a change of character or a market structure shift. So either of those two things you can write down. Basically, that just means the trend may change, or the trend is changing, because we have gone from a downtrend to now we've had a big move up, which indicates this could be the start of an uptrend. So again, what do we expect price to do from here? So if we draw the low to the high, look at where price came to exactly. Price perfectly pulled back into premium and then continued. So this is now where we create a higher high than this one, and we have actually changed character, or we have broken market structure. So this is a market structure shift. We have gone from a downtrend to now we are creating an uptrend with higher highs and higher lows. The reason it's a higher low is because it's higher than this one. Okay, so now we've got the higher highs, the higher lows. This one is higher than this one. This low is higher than this low. So what do we expect to happen now? We draw our Fibonacci again from the lowest point to the highest point. So we are now expecting price to tap into anywhere below this black line to look for a continuation model or a continuation move back up to create a higher high. And it's the same process every single time. So you'll see we come down, tap anywhere into discounted price, and we make eventually a higher high. So then again, the same thing, which I've drawn multiple times. You've got your higher low with a higher high. Now, that is genuinely it. Like, that is generally it of the market structure. That is how the market moves. It's really simple. You look for your key and your clear and obvious swing highs and swing lows, sorry. So your clear and obvious highs and lows. So you should be able to look at this now and pick out that obvious highs and lows. That there is an obvious low. Okay, this is an obvious high. Obvious low. Okay, you get the point. Now quickly I'm just going to touch on why this actually works and why does it make sense. So essentially, going off from my analogy, what I said just about the jumper being on discounted price, that is exactly how it works. So you think all the traders in the world and all the banks and institutions, if they want Nasdaq to increase in price and they want to enter a buy position, okay, why would they want to enter a buy at the most expensive point? So it's like I said earlier with the jumper. Why would the banks want to buy Nasdaq, and enter a long position with multiple millions of pounds at the highest point possible? Because they're going to start going into a minus, okay? They're going to start losing on their position because they want it to go up from here. But we know, just by using the basics of market structure, that a pullback is very likely into discount. So that goes for everybody. That goes for yourself, that goes for me. Why would I want to buy when we are in a premium price, or when price isn't on sale, or price isn't on discount? So simply, all they do is wait for price to go onto discount. So I'm not saying they'll draw a Fibonacci like I do, but they'll do something similar, okay? They will wait, or they will manipulate the market and move it into a discount so that they can fill all of their orders and then they can get in the market. So now the market is pushed down into discount. This is now where the banks and everybody else is like, okay, maybe now we can enter a long position, okay, and we can look for a move higher. And this is where everybody gets in the market because it's the best price possible. And that is essentially the basics of market structure, okay? You're just trying to enter a position at the best price you possibly can. So that is it for the market structure lesson and the basics of why price moves and the patterns it moves in. So hopefully you enjoyed. Hopefully you've wrote down a lot of notes, because that is definitely one of the most important lessons that you need to learn. The next lesson we're going to be talking about, so we're going to be going over like liquidity and what is actually causing the market to move, okay, and where money is lying.